Hey guys, this is Sandy Sills, your licensed realtor and lender here in the Central Florida area. Today I want to do a video on how to use a DSCR loan to do a 1031 tax exchange. This is an investment kind of loan, and a 1031 tax exchange will obviously be done by an investor. I have done several videos on 1031 tax exchanges, but in case you're wondering what is a 1031 tax exchange, it's where you're selling one investment property to buy another investment property without paying taxes from the profit of the one that you're selling. So let's say you have an investment property that's worth $800,000, and when you sell it, you're going to make, say, $300,000 from that property. But if you're realizing $300,000 in profit, then you're going to hold taxes on that $300,000. So in order for you not to pay any taxes on that $300,000, you'll buy another property and use all the proceeds from the first property to buy the second property. The only thing is, when you buy the second property, it has to be of the same value or more of the property that you're selling. So more than likely, you're going to need to, even though you're going to put down this big amount of money on the second property, you may need to also finance. So to finance it, you could do a DSCR loan. Only thing you need to know about the DSCR loan is you have to have a credit score of 640, and then the property qualifies for the loan. So they're not going to have, there's no need for you to supply any tax returns, pay stubs, any of that stuff. It's all about what the property is doing income-wise. How much income are you going to make from the property? And after all your expenses, what is going to be left? And the bank is more concerned about after your debt services. And your debt services are going to be the mortgage, the taxes, and the insurance. Once you pay that, how much is left? And based upon that is where they'll structure the interest rate. Of course, the interest rate is going to be based on the regular interest rate, but obviously it's an investment property, so you're going to pay a little bit higher than if you're buying a residential home. However, the more better the numbers, the more the numbers are in black for the one that you're going to purchase and use the DSCR loan for, is the less interest rate you'll pay. There's also different aspects of the DSCR loan. You could also do a prepayment penalty to get a lower interest rate. What I mean by that is they may offer you, let's say, and I'm making these numbers up, guys. Let's say they say we'll do 6.5% if you sign on the agreement that you will do a prepayment, 36-month prepayment penalty. Meaning, if you sell the property or pay off the property before the 36 months is up, you're gonna have to, you'll owe the bank a prepayment penalty. But if you're thinking you're going to keep the property for a while, way over 3 years, then I would say go with that to get the lower interest rate. Also, you got to compare the lower interest rate based upon what they're actually offering you to see if it makes sense. They also may offer that you could buy points down to lower that interest rate to acquire that other property. Now, in a 1031 tax exchange, you have to identify the property 45 days after closing on the first property. So the property, you're selling property number one to buy property number two. After you close on property number one, you have 45 days to identify the property. So what a lot of smart investors do is they identify the property before even closing on property number one, right? Because they want to make sure they have enough time. You don't want to close on the property and then, have yourself in this 45-day clock, which runs really fast when you can't find what you're looking for. Another thing that you could do, you could go out, find property number two, put it under contract, then sell property number one, and then close in the 1031 tax exchange. Yes, you can do a 1031 exchange on a property that you already have under contract. That is allowed. Another thing is, let's say you're selling property one, but you want to buy 3 or 4 more properties. You don't want to just sell property one to buy property two. You want to sell property one, but you want to buy 4 or 5 more properties. You could do all that. You just have to identify them in that 45-day window after you close on property one, and they all have to close at the same time. They have to be identified, and you want to close them, maybe not all at the same time, but they need to be closed in that 6 months window, and you can't change. Once you identify the property, you're in the 45-day window, and the 45 days window of gone. The 45 days is gone. You cannot change the properties. So this is the reason why you want to go shop for the properties first before you sell property number one or the property that you're selling to do the exchange with, because once that 45 window is passed, that's it. Now let's say you're building, let's say it's new construction. You're buying property one, you're selling property one to buy a new construction home. You're going to do a 1031 tax exchange. You can ask, they will give you extensions Because let's say the builder took more than 6 months to build the property. There is extensions that you could get within the 1031 tax exchange program, but you need to talk with your tax mediator. The mediator is a person that owes the funds. So after you sell the property that you want to sell, you don't get that money. It's held by a mediator. And the mediator will dispense that money based upon the property you're purchasing, which means when you're at the closing table with property number 2 that you're going to purchase, or whatever you're purchasing to replace that property number 1, the mediator is who is going to send that funds to the closing table. So you can't touch that money at all, and you need to make sure you use all of that money. You don't want none left over. So how does the DSCR play? The DSCR play in the fact that you're going to sell this property, you're going to buy another property, but you're going to finance the second property or properties with a DSCR loan. And the reason why you want to do that is because there's no qualification as long as you have the credit score of 640 or more. And as long as you know that the property that you're going to purchase or the properties that you're going to purchase will indeed be in the black, which means when you buy the property, the rental income you're going to make from those properties or property will cover the debt services plus give you a profit plus take care of anything else, then you're good to go. Now, if you're buying a property and it's in the red, meaning you're doing a 1031 tax exchange, you sold one property, you're going to buy second property or properties, but those properties not, like, let's say the debt services is say $4,000 a month and you're only making $3,500 a month. Of course, nobody would do it, but I'm just saying if it were to happen, maybe it's a fantastic property and you're okay with it being in the red for a little bit. Maybe you're buying a property and the rents are undervalued and the building needs to be renovated and you want to do a 1031 tax exchange. Buy that property with a DSCR loan and then renovate the property, renovate it and then you'll get more rent. If that's the case, then you're going to pay a higher interest rate, because with a DSCR loan, if you don't have enough income, if the rental income is not enough to offset the debt services, they see you more for risk and your interest rate will be higher. But what some investors will do, they will go ahead and get the higher interest rate, renovate the property, increase the rent, and then refinance the loan, if that makes sense. So that's something you could also do. So there's a lot of variables in this investment world. I love investments. I do it a lot. I also do regular residential sales, of course. So let's say you had a home. You had a regular home that you live in and you wanted to pull some equity out to buy an investment property. You could also use a DSCR loan to do that as well. So a DSCR loan can be used when you're buying any kind of investment property that's going to give you rental income, like an Airbnb, a regular multifamily home, anything that has to do with you getting income, you could use it. And now more importantly, you can use it to buy short-term rental properties like an Airbnb property, Booking.com, VRBO. You could also do a 1031 tax exchange from one property, do the DSCR loan, get the other property and Airbnb that property. So there's many aspects of it. Do give us a call, send us a text if you have any questions or if you want to get more information. We are good with setting up Zoom calls for our clients all across the states. Doesn't matter what state you're in. We're in Florida, but we help you with no matter what state you're in. The number to text or call is 407-791-4713. There should be some information here down below the video to get you access. But if you have any questions or need more information, give us a call, send us a text, 407-791-4713. We will set up a Zoom call with you and go over this in great details. This also goes for if you're in another country, like you're in Canada or England or whatever it is, and you want to invest in the US, maybe Brazil. We help a lot of clients from those countries as well. Thank you so much for listening to the video. I'll see you on the next one.